The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 11th day of January, doing it remotely once again. You got to be ready for some technical problems, which I'm having, but I'm going to be doing it via telephone. And this is 7 a.m. and the Dow futures are down 42, and you've got the E-mini also down. So let's just go through these different parameters that I would like to look at. I want to do the show today. I think it's quite important. This is an inflection point right here. The market has gone up very sharply. Some stocks are actually up about 20% or more, so this is a very important moment. So a couple of things I'm going to do right now. Let's go to the Dow chart, and I'll show you the Dow chart right here. So this is going to be pre-recorded 7 o'clock in the morning, and it'll be played at noon, my usual time, Eastern time. So let's go. This is pre-market, remember. The Dow closed at 24,000. It went just over 24,000, closed at 24,000, round number, 24,001. In leg C in the Chapman wave did a beautiful left side, right side price time match to the resistance level from mid-January, mid-December's resistance levels, where the market started to pull back very sharply. And now what we're looking at is the MACD is very strong. The stochastic is very strong at 84%. I'm anticipating some choppiness over the coming few days. I'll show you this chart that I showed my subscribers to my opening call. Right here is the 120-minute chart. Now you can see the overhead resistance was just brief in the previous incarnation of the up move, and then there was a pretty sharp down move to the 22,500 level. Then it smashed right, it just went right through those many resistance levels. That's unusual. And what it says is that the very next series of Chapman wave automated resistance levels that come into focus should be much more powerful, and that's where we are right now. So within the 24,080 to 24,185 level, there's a lot of resistance. Meantime, back at the ranch, the 120-minute chart is just starting to show a little bit of tiredness in the MACD. The stochastic is still very good at 86%, but is moving a little bit lower. So let's just put that all together, and remember, this is being recorded 5 hours? Yep, 5 hours before my usual time. Let's look at it this way. Within the context, no, it's 7 o'clock to 12. Yep. So within the context of the markets, you've got this V-shaped recovery in the Dow daily. You've got the V-shaped recovery attempt in the weekly chart going right to the 9-period exponential moving average. The MACD is improving a little bit, is still very weak. The stochastic has gone to 22.78%. That's good. The 120-minute chart shows resistance, and you've got the monthly chart just a week and a half into the first part of January, and so far it's a much better candle than it was in December. So I'm looking at the 23,950 to 23,920 area as some form of pretty good good support. But I wouldn't be surprised if there's just a sudden move. What happens in a move like this, when you get a very quick A to B and then a strong leg C, sometimes getting to leg D can take a little bit of time. So I'm thinking there could be a bit of a pullback today. We'll see what happens, but sometime next week we should make a D. Looking at the S&P, let's go right there. S&P is okay. There it is. The S&P is trading at 2596.64 to close on Thursday, extended a leg B. Now this is early in the move, because if it's going to go to the requisite Chapman wave buy mode of a peak C, a peak D at least, you've got still to make a peak B, maybe that's today, no new high today. Then you make a leg C, then a peak C, then a leg D, then a peak D, and that takes you into mid-week next week, options expiration week. So far, the technicals are very strong. I'm anticipating we do get that leg C early next week. As I'm looking at it right now, the weekly chart has gone right to the 9-period exponential moving average. So there again, a little bit of resistance, and we're going to see whether or not the Qs in leg C very strong at 160.15 now, down just a little bit from the close yesterday, Thursday afternoon, and 161.28 was the close. Now this is going to be important because the MACD is very strong, stochastics at 87%. I suspect there's a bit of a pullback underneath yesterday's low over the next 1 or 2 days. Doesn't have to be, but I'm thinking it could be under 158.70, and then we go for a leg D. And that's going to be very important in this V-shaped pattern that's unfolding. If you look at the IWM, which has been a little stronger than the others, IWM right now is trading down 0.47 at 143.17 after yesterday's close, is above the 9-period moving average in the weekly. This needs a lot of work to improve the technicals, but this has so far been a bit of a leader out of all the indices in January, and that's really important. We often get the small caps leading in January, so we're going to see if that can be continued. Looking at the GC, and this is the GC is the gold contract, up 5.9 at 12.93. There's a high-level consolidation taking place here, and we're looking at the exact opposite of what we had seen before when the dollar was strong and gold was not dropping sharply and just having moderately lower lows. And now the the dollar is taking on the aspect of pulling back in a sell mode in the daily, just went to a sell mode in the weekly. The monthly is still very strong. So what happens next is going to be very important. If gold snaps into the 1305 or higher area, it should take off even stronger. SI is the silver. Silver right now is up 0.102 at 15.745. Also high-level consolidation after that peak E. It's got very strong support in the mid to low 15s, so this is acting very well. Let's go to the EUR USD. That is the here we go. Euro-dollar currency pair trading at 1.153, up nicely, getting closer to the 1.157 200-period moving average of the daily. And we're looking at the USD JPY before we go to the dollar, and then it'll probably be a break. So that is trading at 108.28. Not bad, just a little bit lower. Not a great chart pattern at all, but it's holding quite well. Let's go to the dollar, and the dollar right now is down 28 cents at 96.29. So it's right on the 200-period exponential moving average of the daily chart. The MACD is very weak. Stochastic is at 11% now. Can you believe the dollar stochastic was way up in the, it was really up in the 80s earlier. That was back in December because it's had quite a bit of a pullback. Now what we're looking at is the low that was made in the dollar back in the week of 19th of October at 94.79. That's going to be very important to hold over the coming week.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at Taz has even put together a 12-part video series to walk you through every aspect of the Taz Profile Scanner, which you can find directly on the Taz order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the Taz Profile Scanner by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
We're back, and I did hear that break. I didn't hear it going in. I hear it coming out. All right, so crude oil is up 24 cents. This is really good action in crude oil. I'm suspecting that this is also telling us a little bit about this phase of the market, now that crude is actually participating with the market on the upside. I kind of like that. I think it's important. And let's just have a look at the TLT. The TLT is trading at this particular moment at 120.54. Remember, this is pre-recorded live at 7 to 8 o'clock this morning. Broadcast in my usual time slot, 12 to 1. So I'm looking at TLT at 120.54, up 8 cents. It's been pulling back. 120.54, it's been pulling back, so it's down 3 points from the high of just 6 sessions ago. That's kind of important because it means that, from my reading, it means that money is coming out of the safety of bonds back into the market. Risk is on, and that is good. And I'm looking at this and saying, well, if the TNX, if the 10-year is going to be trading in a range, that's fine, even if it rallies a little bit. In a sense, I think that the Fed would like to see a little bit of inflationary action here. They don't want to deflation. I've got a feeling, the more I thought about this, that comes February, probably later in January, maybe early February, that's when the Fed suddenly sees strength where we don't expect it to see strength. And that could be the surprise. The next big surprise could be that the Fed says, you know what, we're still seeing some strength. Anyway, we'll deal with that when the time comes. Now, let's get, I had a bunch of questions that I made a note of. NBEV was asked about yesterday. I didn't get to it. NBEV, if I can type that in correctly. This is in the medical cannabis area. Excuse me, why aren't you coming on? Uh-oh. Is that the next problem I have? Yep, that's another problem. Give me 1 second. I have to disconnect. Come back again. This is one of those challenges. Anyway, we've got to deal with them. Life is full of challenges. Give me 1 second as this host computer is connecting. Put in my password, and we should be good to go. There it is. And we are good to go. All right, so NBEV, now I've got my earphone. My engineer, Al, I think we're all set to go onto the headphone. Can we do a transition just as I'm talking here? Would that be okay? Can you type in what you think? I'd much prefer to be using the headphone. We can do it as a transition right now, or should I wait for the break? Let's switch at the break. Okay, we'll switch at the break. So we're looking at NBAV trading at $6.01. This is New Age Beverage Corporation, and I'm just going to, if you don't mind, I'm going to make that little thing softer over there, if I can. There it is. Okay. Oh, one hand and juggling about 3 different screens. Here we go, on one computer. NBAV I like. Now, it didn't participate as well as the others, like GWPH. I do like this. I think that it has a chance. Remember, we spoke about that ugly candle. I want to see a break above that ugly candle of the 21st of December. The high was 648. The high yesterday was 645. Almost made it, and then closed with a long-legged doji. I'm suspecting that this is going to work its way high. Remember what I said? I'm anticipating, for the person who asked the question, this is something that I'm looking at as a stair-step move. If it didn't do it almost immediately in the U-shaped pattern, then it works its way higher. So yes, I do like it. Be prepared for a little choppiness here, but I'm suspecting that by Tuesday or Wednesday of next week, there is a test of the candle high of 648, the candle of the 21st of December, going into the 20th, and that high is 685. I don't think it goes to 685 just yet. I might have to first just test the upper part of the candle of yesterday, and then we'll see. It does have support in the 573. I would not like to see it under 562 because then it's going to take a little more time than it should. So it has to hold this area and work its way higher over the coming 2 days without dropping too much. So I do like it. Next question I had was, made a note, let's go to, GBTC. So GBTC for Jim, I had said, in a note to him, I was a little concerned. If you're going to be in the speculative area, then I'm suspecting rather than the ETF, the Bitcoin Investment Trust ETF trading at 432, I'd much rather be in the whole cannabis area. At this point, if you're going to be speculative, that's the area that is more of interest to investors now. I think then the Bitcoin. This is for the moment. I think Bitcoin comes on strong later on, maybe later this month, maybe even February, but I think it needs a little more time. So the answer there is I wouldn't hang around. If you got a little bit of a profit, I'd probably take that off and then start. I'd even wait for a pullback in the whole cannabis area over the next coming few days and then get in, or you could just nibble here and then add to it later. But that's the area I would prefer to see you in at this particular time. Question I had about, let me go there. Oh, that was that I said that I would do today. $W5000. So the work I did on this tells me that, so the question was the Vanguard equivalent of the big total market index. So I've got the Wilshire only because I've got it all notated. I did take the 2 charts out. They are very similar. So what I'm telling you now in the Wilshire 5000, I think would apply very well to probably to the Vanguard. Oh, I even wrote it down somewhere, and then I forgot to, VTI, there it is. So it's the Vanguard Trust. Let me just have a look here. But this is the one I've got notated. So VTI is the fund that you can look at. Have a look. Very, very similar. VTI is at 132. I'll do VTI without all my notations. Let's have a look. So it's trading at 132. 129 is the 9-period exponential moving average, which corresponds exactly to the 14-period moving average within a couple of pennies. So that should be very good support. The 50-period moving average of 134.40, I think, is really a target area for this particular move. It's only in leg B. I suspect it will go to a C and then to a D. That's higher peaks. So I'm looking at this and I'm saying the 9-period exponential moving average in the weekly chart is 132.81, exactly where it is. And the MACD is starting to improve a little bit. Long way to go to cross positive, but it is improving by the histogram, the distance between the two moving averages, and the stochastic is very good. Just a quick check on my time. Yep, I'm getting close to a break, and then I'm going to switch over to the headset to make it a little easier. Now, this is leg A in the weekly chart. So the 134.95 would be the VTI, Vanguard Total Stock Market Fund, and that would be my target for this particular move, 134 to 135s, okay, in this first 2-3 weeks of January. So, okay, got that out the way. So for our caller yesterday, Roy, I'm just going to go back and say, looking at the Wilshire 5000, and that has almost the same, exactly the same thing. It's gone just a tad above the weekly 9-period moving average. Okay, we've got a break coming up. Basil Chapman, pre-recorded at 7 to 8 o'clock in the morning. I'll be right back after these.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour on this 11th day of January, and we are looking at the Wilshire 5000. So this is going to be very important. As long as, in this case, the 9-period moving average right there is holding. I just did that with the, what were we looking at? VTI. So the VTI is the Vanguard Total Income, Index. and this is the Wilshire 5000, and they do exactly the same thing. So far, a very strong move. You can see in the weekly chart in the middle, the histogram's improving. The MACD is got a long way to go to cross positive. I don't think it's going to cross positive for quite a while. Meantime, so to answer the question I had yesterday from a number of people, I'm anticipating that at some point in the next within say after options expiration this coming week, somewhere within the period of say the 20th of January. Remember, I'm doing my webinar on the 23rd, an all-day webinar on all these techniques that I always talk about. I'm suspecting that sometime in that period, going towards the end of January and then the beginning of February, we're going to start having tremendous choppiness, and that choppiness is going to be economic, it's going to be political, it's going to be geopolitical, and it's going to have other aspects to it. Whether or not the market just ignores it and starts to hold support and make higher highs and climb a wall of worry, or whether it becomes impacted, and my thinking right now is it's going to be of such a nature that it a day. Okay, there it is. Yeah, what will happen is if the market is impacted, we're going to be testing close to the most recent lows. And in this case, it's Dow. That was the 21,700 area. I wouldn't be surprised if the big test comes at 22,500, 22,300. That's going to be key. But I'm not going to worry about that at this particular time. You can see how even yesterday the market wants to ignore internal weakness or outside noise. Let's put it that way: outside noise, and used internal strength to come back strong. We did take a very nice gains in the Dow call option, and it got even better by the end of the day, but we were out. That's okay. We're going to be coming back again on any pullback. Most importantly, what I am looking at is within the context of the different sectors, the semiconductors had a very nice move. That's because of right here. Look at that, leg C. Good, two green candles moving with the Dow in concert. I like that. Stochastic is okay at 69. MACD is improving. The weekly chart is improving quite a bit. Stochastic still very flat. It's under 20% at 19%. Monthly chart is still very weak. I think that the semiconductors, I don't see them turning the corner just yet. I think they need this whole first, at least January to early February as the first quarter. It's a very big thing for the semiconductors to have had an incredible 2 years of gains, especially their last year going to that March of 2017 all-time high at 144.55. They made big bets, and right now they're in the pullback. They're in the quandary area. What do we do next? And I suspect it's going to take them all of the first part of January and maybe February to really decide how they're going to negotiate, because it seems to me there are some pockets of strength in the economies, even worldwide, even though people are now talking about worldwide economies are slowing down. I suspect the way they look at it, they're going to start preparing for the next big move. This is the period where they start being very innovative. So this semiconductor index is going to be a big clue at 90.82 right now. Pre-market this morning, I'm looking at it and saying, well, if the semiconductors are able to get, as SMH ETF is able to get to the 95s in this period of the year, this early period, sometime in January, I'm going to be quite impressed. If it fails in the 92 area, and then all of a sudden you're looking at it at 86, 85, that's just not going to be very good. And that's going to be telling me a lot, especially if you put it together with high-grade copper. Look, high-grade copper having a little bit of an update, but look at that chart. That is not very positive. Wood, which is the international global timber and forestry ETF, has had a spectacular move, going from the low of, it's trading at 62.31 at the close yesterday, a little double bottom low at the 55.06 area, 55 to 62. Getting back all those losses from the mid part of December down, I like that. I think that's a very good sign. And that's telling me that the low that was made in December 24th and 26th in the different indices and major stocks, I think this is the real internal low, and now we have to wait for some residual low. And now I've been talking about that as earthquake and aftershock, internal low, residual low. And we're going to see how the weighting on the right side of the chart compares with the left side. Which areas still have to make another low? Which areas have made the low for this particular period and aren't coming back here, at least for quite a while? So with that said, let's look at something like a Home Depot, because Home Depot in the building area has gone from a low of 158 back on the 24th of December to yesterday's high of just over 180. Trading right now 179.06 pre-market. I like the action, but it's not good enough. I want to see Home Depot in the 187 to 190 area by the end of January, and then I'll be convinced that the low we saw in the HGX, the HGX is the housing, is the Philadelphia housing index, sector index, and I've never figured out, is it Philadelphia housing or is it the index that's the Philadelphia housing sector index? I must check that out, because if it's the very broad index, which is really, I've always thought of it that way, going from 369 to the most recent low of 229, was that 229 or 228? 227.67. Gosh, that is a very, very powerful move to the downside. That's over 30%. And this is a really terrific move, going from the 227 to the 266 level in one foul swoop to the other, actually two, because it's in leg B, made a peak B yesterday. This is really good action. So finally, the housing sector is developing some legs to it. And within that context, if I could just check something out here, within that context, what's really important is that on a weekly basis, it's so far above the 200-period exponential moving average in the weekly. Do you know that it's only been there since it broke down the HGX index in October, the week of the 12th? It smashed right through it, going from the 280s down to the 250s, and then it tried once to break above and it couldn't hold. It went above on the week of the 9th of November, then it went above for the 2 weeks of late November and early January, couldn't hold it, and all of a sudden you're looking at, there it is, let me get out of that. You're looking at, this is the first time. So this is first time in January. So this is 1, 2, 3, 4 attempts to close above. This day, Friday, the end of the week, Friday, 266.43. It's able to close above the 200-period moving average. That'll be a big bonus. We'll be back right on. This is Basil Chapman.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, we're back. Basil Chapman, Tiger Technicians Hour. This is the pre-market recorded program. It's going to be going on at noon, and I am going to just be doing one more segment. I will not be able to do the last segment, but I did want to do today because we had some questions yesterday that I thought was appropriate to be able to answer. One was, where are we within this market framework? I think that we've made an intensive low. I won't be able to do it today. I'll do it when I'm back at my home office, and on Monday I'll be doing a whole thing with what I'm talking about in terms of the VIX. I'll send out information over the weekend to my subscribers to my opening call. We are long positions. We are not. I'm not looking to short anything right now. I think later on we'll start looking at the short side again, but right now I think that there's still upward momentum, and that's going to be very important. We're looking at the home builders. The home builders are telling us that some form of low. Look at Toll Brothers. I mean, look at this move. This is a whopper. It's gone from the 30 level all the way to 36. It's 20% gain. I like that, but it's getting a little tired here. So this is a peak A, B, C. I'm calling this a D for now, and it's right at the 200-period exponential moving average in the weekly chart. Could have a bit of a breather, but it's been a fabulous move, but not in the monthly. The monthly has gone from 52 down to 30. I would say that is quite a give back of gains that was started at 23.75 back in February of 2016. So it more than doubles. And then it comes back and gets cut almost, not in half, but almost in half. That's really tough. So, Toll Brothers. Now, what I also want to look at is IYT. A bunch of questions came in. Let me look at that. The IYT right now trading very nicely. This is telling me that there's more to go in this recovery period, that there's going to be a lot of choppiness, and that we will see, when you got Federal Express taking a whopper of a hit. Federal Express goes from the 270s down to the 150s. Yeah, that is something that you got to respect as telling us a story. UPS, let's put them together, so maybe they're different, but they're in the same sector. It's the same thing. United Parcel 135s down to the 90. These are big moves to the downside. They're going to take time. This is the transportation. Look at the XAL. The XAL trading at 98, had a nice move off the 86 low to the 97, but look what it's done. It's gone from the one, I haven't got that typed in, I should have, from the 124 area down to the recent low of 86. These are big moves, and it just doesn't come back on a dime, not when the economy and everything is right in this shaky period. Now let's go to my index, and that is my cash index, CASH. C is for Cintas. Had a real nice rally from the 133 low, but it came from 217 back in September. So we are looking at this as kind of, at this particular point, it's a really nice bounce at the 14-period moving average of the weekly chart. Not great. Amazon should have been soaring. It's come back very nicely, but it's gone from 2050.50 back in September to a low of 1307, trading now at 1656. Fabulous comeback, and it's helped improve the monthly chart, but this is a serious blow. HD was HD is Home Depot, and for the H and SPY is the S&P. So the S&P has also had a 293 move down to 233, 60 points. That is also big. It's going to take a while. So I wanted to get that out just to say that over the weekend I'll show charts to my subscribers, as I always do, and we'll be showing how the various indexes have formed lows, but it's a unified low on the 24th and 26th of December. This is a fabulous bounce, but how it comes down to land the second time round as the plane hits the tarmac and then comes back for its second bounce, that's going to be very important. So that's all information that I wanted to impart to you just as we're looking at a close of the week. And something else I'm looking at here is within the context of the SPY, this is a leg B. It's got a lot of support. It's at 258, a lot of support in the 255s in the short term. Question I had, was it yesterday or the day before? I never got to. Oh, yes, natural gas, NG. Natural gas is trading down the 304 level. I don't see anything just yet for it. It is right in the area technically where it could bounce a little bit to the 3.18 area. If we can close above 320 by Wednesday of next week, that's going to be the first really good sign in a while. If it stays underneath 3 or at 3, it's just kind of stuck. I was also asked about the soybeans. This is a continuous contract, finding some support here at 910.5. It has to get to the 917 area, and it has to do that really quickly. It has to do that by, I think Tuesday or Wednesday, because if it breaks under 904, that's a real problem. And W is for, this is right here. We're looking at continuous contract of wheat. Hey, what a nice candle. Ugly candle yesterday. Full candle give back today of the loss. 5 up 5 3/4 at 519. This is what you want to see in soy as well. You want to see a really good candle, and you want to see wheat now traded 522, above 522 by, I would say, Monday. It needs speed right now to break away from the 512s. So that's that. There were 2 questions I had that were sitting there. Why am I forgetting them right now? Oh, New York Stock Exchange. Yes, the very broad New York Stock Exchange. What we're looking at is a good comeback after a 31% decline from the 10,723 level. We're looking at a leg B, and it's really important that there's a move. Even if there's a pullback by Wednesday, you want to see 11,900s in the New York Stock Exchange. That would be really good action, and it'll help a lot in all the in the way that there's this kind of rotation through the different sectors, and the way they've had a fabulous 4 or 5 sessions of continuous up moves, not even a peak throughout the entire week, just higher highs. I like the recovery highs. That was that. Oh, the TNX. Yes, I'll have a look at the TNX. TNX right now is trading at 2731, 2.731. I can see it up in the 2.75 area, 2.7. But it has a lot of support in the 26.9 area, so 26.9. Yeah, this is it. A little bit of a bounce after a really sharp move to the downside. This is the inverse of what we're looking at in other areas. So if money comes out of bonds, and goes into stocks, you will see yields go higher with the price of the equities. It's kind of the way I'm looking at it at this particular point. J&J, quick question about J&J. Yes, this is telling me that the defensive stocks are having a little bit of a breather as the more speculative stocks are moving. Look at Square. Square is moving very nicely. It's down a little bit pre-market, down 20 cents at 66.90. Had a great move from about 50 to 66, 16 points. That's pretty good, but it came down 50% from 101 to 50. So this is a repairing. So folks, have a great day. Stay tuned. If you're listening to the show pre-broadcast, it's going to be Steve Rhodes coming up. And then, of course, you've got Dave and Tom Bryan. Check out my opening call. Check out my webinar coming up on the 23rd, an all-day webinar. Have a wonderful day. Thanks for being here. This next section will be now.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.